Welcome to the Miles Better Finance Friday series of videos, all about things from the Accounting Translator Guide. My name is Collin Miles and I'm the CEO of Miles Better. Thank you for joining us as we look to bring to life in plain speak the various definitions from the Accounting Translator Guide. Today we're looking at the term balance sheet, one of the three key documents that we need to understand in business. Some people think it's called a balance sheet because, as in many cases in accounting, there are two sides and they have to balance. Well, in this case, that's not actually the case. It is literally a list of balances of the wealth statement of your company. What do I mean by that? Well, as I say, it lists everything that you own. So included in that would be fixed assets and current assets, two more terms that we'll explore in other videos. But for today, a fixed asset is a building and a current asset is something that you can sell or you can liquidate. So cash or perhaps an IOU where you've sold something. So we list everything down that you own. That's your positive side of the equation. Then, unfortunately, we have to list everything that you owe. And that also has a funky name called liabilities. So we'll have long-term liabilities and short-term liabilities. Long-term usually are debt. If you've gone and borrowed money from a bank or you've got an investor who doesn't want his money back today, but is still somebody that you owe. The more current liabilities will be things like taxes to the IRS or HMRC in the UK. Maybe you have a staff that you owe, and obviously bills that you have bought that you haven't yet used, or you haven't yet paid. Now on the flip side, if that was stock, then that actually would be viewed as a current asset because you own the stock. So again, you can see there's a balancing number. So we first of all list everything that we own, and then we list everything that we owe. And then we subtract them. And then we hope, in most cases, that's going to be a positive number. And that's when it then becomes the wealth of the company. If you're a single shareholder of your own company, that number is very important to you because it's the wealth that you could have out of your business. But it's a line in the sand, and it's a number, as you can see, that is made up of things that we own and things that we owe. So at a very quick look, you can say, where is my cash? Well, your cash is tied up not only in the cash, but it'll be tied up in your business, the fixed assets, and also the stock. We'll talk about that in another video as to the importance of stock and cash. But for today, the balance sheet is your wealth statement. It is literally everything that you own minus everything that you owe. And if it's in positive, your company has wealth. If it is negative, well, then your company is potentially in trouble, and we'll look at that in another format in another video. I hope that has brought to life and in some plain speak some of the understanding of what a balance sheet is. Do check back every Friday for more plain speak translation of the language of business, which in our world is accounting. Thanks for watching. I hope you liked the video and the tip. I'd love to send you a copy of our amazing guide to business, the Accounting Translator. Our free 50-page ebook worth $29.95, sharing with you the language of business, accounting, but in plain speak so that you can actually use it. Hundreds of businesses are benefiting from this refreshing approach, and I'll hope you'll take up the offer too. Head over to theaccountingtranslator.com and sign up to gain instant access to this fully powerful tool. I hope you enjoyed all the videos. Please use the button to the right to subscribe to our channel, like, and please comment below. And we hope you live a miles better life.